Last week was pretty eventful in the gold markets. So in this video, I'm going to discuss about a few fundamental data points which one can look at to see how the market more broadly is feeling about gold. Are people bullish? Are they bearish? And how can we use this to actually trade even algorithmically? This video is sponsored by Prosperity Algo and our free Golden Time Bomb Expert Advisor. Do you want to make 100+% annual returns through automating the London breakout and the opening range breakout? Then click the link in the description. So as you guys can see, I pulled up a daily chart here, and for context, it's the 1st of March 2025 today. And last week was absolutely crazy for gold. So we started off here like going higher and higher and higher, and on Monday and Tuesday, we actually hit all-time highs once more. And then we had this absolutely enormous sell-off in gold where we lost this is 4.2% in just a few days. And Friday, we then had a massive rapid pullback from gold in the afternoon by almost 1%. So all things being said, this was an incredibly interesting week. And what a lot of people are asking now, and obviously we'd all be very rich if we knew the answer to this, is this just a little pullback, or is this perhaps the start of more of a bearish trend in markets? And this is not just a common theme amongst gold. We've been seeing people discussing this in equities, like for instance, the NASDAQ had an enormous sell-off as well after hitting all-time highs. We can even go over to the DAX, where they had a small sell-off due to some profit taking and then a rapid bounce back. So this was like a common theme in the last week of February 2024 with some massive sell-offs. So here today in this video, what I really wanted to discuss was a few different data points which one can look at. As you guys know, I am a fan of the Commitment of Traders report, and our Golden Longbow bot uses this as its primary data source in order to make trading decisions. But something else I wanted to discuss today was the concept of the put-call ratios. And put-call ratios, they're looking not at futures data, but specifically at options data. And specifically, here we're looking at the options on the GLD ETF. So the GLD ETF is traded on essentially spot gold. It's one of the largest ETFs in the world, if not the largest, and its primary holding is just spot physical gold. However, the GLD options chains are some of the most liquid options on gold. There are also options on futures. However, because there's so many different strike prices and whatnot, many options traders who want to speculate on gold prefer to speculate on the GLD options. And what this can tell us is it gives us a really interesting data point regarding particularly how retail traders are positioned and how the market is positioned, how the options market is positioned regarding if they're feeling bullish or if they're feeling bearish. And this data can be a really interesting additional fundamental data point to our trusty COT report in order to see how traders are currently positioned. So effectively here, what I would essentially do as part of my analysis is I can see that, okay, we had this massive sell-off last week. Is this potentially going to continue further, or are we looking to kind of make higher highs once more and go back to the upside? And there's lots of different analyses which one can do, along with more technical analysis. You can look at sentiment and what the news is currently talking about. Like this, for instance, was a pretty big bounce, which a lot of people are attributing to some of the conflict that happened in the Oval Office between Presidents Trump and President Zelensky. So there are some other more qualitative factors here, but going back to our put-call ratio, this is particularly interesting as it makes for another really good quantitative data point, which is not as subjective, which we can use to make more weekly bias-based decisions. So coming down here, we can see that the put-call open interest ratio is 0.66. And if you can read here, what it says is that a put-call ratio below 0.7 is generally considered bullish, and a put-call ratio above 1 is generally considered bearish. And what this is looking at is looking at the total open interest for call options versus put options, and then simply dividing the quantity of put options over the quantity of call options. So here, if the denominator, the calls, are larger than the amount of puts, we would see a value which would be a decimal value or below 1. And obviously, the smaller this number is, the larger the calls are relative to the puts. And that's really, really interesting because it shows us that people are particularly bullish as they're buying call options relative to buying put options. And if you're less familiar with options trading, calls give you the right but not the obligation to buy a security at a given strike price, whereas puts give you the right but not the obligation to sell a security at a given strike price. And why this is really, really interesting is it tells us pretty much how people are also speculating on ETFs or on any sort of security at a given price point. So here what we're seeing is that there's a lot of calls in the market relative to the puts, meaning that the options markets are currently bullish on gold. And particularly here what's quite neat is we can actually look at how this is changing with the price of gold. And another kind of additional data point, which is quite neat, is this also focuses heavily on retail traders here as you're trading the GLD ETF, which has quite a bit of retail participation in it. So I digress. We can see here that last week when we hit all-time highs, it's because people were very, very bullish, or not because people were very bullish, or partially, but people happened to be very bullish at that time. But now we still are in a very bullish period, so the market still believes that the general gold price is going to continue rising. However, is not quite as bullish as last week because of the fact that we did have this pullback. So this indicates that we are still very, very bullish. It isn't like people are all of a sudden going super, super bearish. However, there is a little bit less kind of exuberance than perhaps last week. So this is interesting to me because it tells me that generally speaking right now, more options traders are still more bullish on gold as opposed to, for instance, being very bearish on gold. If this value were to enormously spike up here into the, 1, 2, 3s, we would then know for sure that people are very, very bearish on gold and they're shorting like crazy. But here we still see that overall the options market remains bullish on gold. And we can kind of go back to our COT report here and kind of do an additional check where we're able to see that the net long positioning of participants has actually increased since last week. So really what this goes to show us is that you never know anything for certain, but what's just a very neat data point, which I wanted to walk you guys through here, is the open interest ratio, because it helps us see what the market is currently pricing in. So none of us know for certain what gold is going to do, but at least we know that the options market more generally thinks that this is just a small pullback before it goes back up. They could be right, they could be very wrong, but it is still a very useful data point for us as traders to keep in mind. And that's why I wanted to show you guys this. So please Google bar chart, put call ratio, ETF of your choice, and you'll be able to get some really interesting information here. So not a plug, they don't pay me anything, but this is a very, very fascinating data point, which I find many Forex traders in particular don't pay all that much attention to. So I thought I would share it with you guys as it might help to inform your weekly bias. So specifically here with our longbow bot, what we've been doing is you buy at market open, you sell at market close, and lots of bots which trade more on bullish momentum benefit from having more of a bullish, strong trending market. So using data like the put call ratio and the COT report can help you essentially select your portfolio and know which bots you want to run during a particular given time period. Therefore, I thought this might be an interesting data point to share with you guys. Leave me a comment if you found this useful, and have yourselves a great day.